Good afternoon, traders. This is Christian from Trade Trade Group, and this is your end of day recap for Thursday, the 22nd of August. Themes of the day. Well, I think there was a couple, a few changes for the day, but in regards to kind of the macro things that I watch today, what I found that was interesting today was over the last few weeks, we have seen the dollar go down, and we had a reversal off the dollar yesterday. A hammer bar being put in and a stronger dollar like follow through for the dollar today. So a little bit of a headwind there. And then I also think with TLT, which was down about 1% for the day, I think that rates moving higher too, right? And it's funny because I was just hearing about, rates are going lower and that should be good. And you kind of got a reversal off of that yesterday. So, I think that in combination with that earning, I've been talking about how earnings, if you watched my video yesterday, I was talking about how earnings have been really good, and really that's been kind of the backbone, I think, for the market moving higher. But today, there was a couple weaker reports, so you kind of have to understand that there are going to be weaker reports. I think there's been more stronger reports over what we've seen for the earnings quarter, but there's definitely going to be some names that are going to miss, and so I think just the combination of stronger dollar, higher interest rates today, and weaker earnings reports had something to do with today's move, and probably just a bit of complacency as well. We know that the equity put call ratio has been really low, just indicating that there's been a lot of calls being bought and not a lot of puts trading overall. Risk disclaimer in front of you: everything that we're going through is for information purpose only, not giving any advice or recommendations. Everything that we're going through is for information purpose only. Also, if you want another reason, I know people like reasons, but maybe a little bit of jitters into Powell. I think I talked about that in yesterday's video too. I don't really see too much of I think it's kind of just an overreaction to anytime that Powell is going to speak. I think at this point they're pretty steadfast, or at least I think they're going to be, that they're going to be cutting interest rates in September. Tom McClellan put out a really good note yesterday saying that the 2-year yields has already accounted for that already. So sometimes that kind of leads a little bit. So yeah, I mean, we're probably going to be starting a cycle of interest rate cuts. Now, I don't want to really get lost in the narratives about, sometimes people say, oh, the first time that they cut interest rates, it's a sell the news type thing. It may very well be, but I think really, I think what's important is for the market to continue to show good earnings reports. So that's my thought. It doesn't mean that we can't back and fill here a little bit. I have up the first chart, which I forgot to go over yesterday, but the RSP, the equally weighted S&P 500, made a new high yesterday, and you're going to see this in a lot of charts today. A lot of reversals. We started the day higher and we kind of move lower. You have to be careful of those. Those have not been really good, things that we've seen along the way. But I would say for now, we're still holding the 5-period moving average in the equally weighted. Let me go to the S&P futures here. In the equally weighted S&P 500. So 2 things here from this chart. I've been talking about the bullish 80% rule, and we got very close to it being taken out, right? This is where, of course, the bullish 80% rule is for, it's for value area studies. And when you break into a value area, when you haven't gone one path, or one pass, I should say, through a value area, and as we didn't here, we opened up inside value, but we went straight down. And then here's your break back into the value area. This triggered the 80% rule. We talked a lot about that over the last week or so, and that completed today. So we hit resistance, right? So number one, bullish 80% rule complete. And if you're looking for more than that, you're probably a little bit on the side of greedy, to say, because that's been a nice move from the lows to highs. And again, price giving you a sense right there at the top of the value area where the resistance was, and that was pretty true to form. So 5660 is a level to watch for S&P futures. and we'll see how that goes. But we did slip back below the 5-period moving average. So the 50-day moving is down. 50-day moving average is down here. It's one of the things that could happen is that we could come back and we could check back here, right? We know that generally the end of August and September are weaker months. So I think that would be perfectly normal to see something like that. But one of the things that I find interesting too is when you look at breadth, which is here, there really hasn't been any pickup. But this is 4-week, by the way. This is not 52-week new highs, new lows. This is 4-week new highs versus new lows. Why do I look at 4-week? I don't know. It just kind of gives you a sense of like what's going on more in the short term, right? And look at the S&P today. And again, it's we had a reversal. The market did this. They will count it if a name hit a 4-week new high today, even though that's not where it closed. It will still count in terms of how Bloomberg and I'm sure how other publications count it. But you had 104 new 4-week new highs, new 4-week S&P new highs today. If I'm saying that right. And you had 3 new lows. So, this market is still, I think, fairly strong. Could it take a breather here? Yeah, I think so. But you could see, here's also if you want to see the 52-week new highs versus new lows and how this looks, right? And by the way, this is a day lag, but I mean, that's been pretty strong. Right. And it's kind of, what you want to see. Now, you can make an argument that we're not making as many 52-week new highs. Maybe that's a little bit of a divergence as we got closer to this. I mean, that's something to say about that. I think that you probably have a point if you're making that. Also a divergence here too, where you haven't made nearly as many new highs here as we come back and we retest. So what that means is that even though that's still decently outweighing the new lows, there's just not as many stocks that are breaking out. So I think that's pretty interesting. So again, I would say that's more of a bearish divergence. But you have to kind of also just realize that we did not make a new high in the S&P or definitely in the Qs. And here's where the Qs are, right? And the Qs are back into the 50-day moving average, right? So that's a good retest here, right? And that's a good check back, kind of giving back a couple of days of reaction, or price action, I should say. That's sometimes how it works, right? The other thing is too, I always hear this complaint all the time about volume. Oh, it's a low volume rally. Well, that's exactly what you want. Volume, when you see higher volume, that's distribution. And that's 90% of the time you're going to see higher volume on your red days because people are trading more. The action is faster, and people are trying to get out a little bit quicker. So in any event, that's the story there. And then IWM, which I thought was interesting because it actually outperformed. But I wouldn't get too excited because it hasn't been able to even break back in to its August value area. And, again, the value areas are giving you great levels of support and resistance because 215.55 it has been a stumbling area for that. What else do I want to talk about today? Names that have been strong. We didn't talk really about sectors, but I thought that this was interesting. Just I noticed this. I tweeted this out. I think it was either Friday or Saturday. It's probably Saturday morning. Just about how the semiconductors, they've just been basically wild in terms of the moves that they're making, right? And like this is really something I think interesting too, because if you're just day trading, one of the things that you probably want to be day trading is, and you don't even have to pick a stock, you just go with the whole sector ETF. But these big moves continue for the semis, and if you're not familiar with what I'm referring to, by the way, nice earnings by Kava after hours. So again, like another one, there's some good earnings reports today. This is after a big run. The stock's up to 107. Also, Ross Stores is following what TJX did, right? So again, it's not going to be every retailer. The good ones are executing. Something else that I thought was interesting. Sorry, as I get off track here for a minute, but I thought that this was pretty interesting about not Ross stores. Sorry, Kava. I don't know. Maybe you could go to Ross stores and pick up some Kava on the way home. I don't know. I'm being funny here, but jump on comparable sales outlook. Sales surge as diners flock to steak and pita add-ons. So again, it kind of just goes to what I've been hearing, and I believe this too, is that the consumer is just getting more choosy. Fast casual chain lifts full year outlook on increased traffic. CEO Schulman says trade up from quick service restaurants. So again, I think that some investors are getting a little bit more healthy. They're not eating as much, maybe, McDonald's or, some of the other fast food chains. They're going to more things like Sweetgreen, which had good earnings. What, last week was it? Right. Sweetgreen, which I've certainly have eaten out a number of times in New York City. For a while, there was a massive line trying to get into this place, but so here's the move up on earnings, and it didn't close on the highs again, but hanging in there. Right. Another one too that I was looking at early on, and I try to day trade this a little bit too, but I kind of gave up on it with this tape. But DoorDash, which did not close on the highs, and I did dump it, and it was just a day trade. But so again, just a shift in what the consumer is doing, and it does sound like they're getting a little bit more health conscious, and they would rather get pay up, I guess, for a little bit of good steak. I guess is what. Now, I've only been to Cava a couple times, so I can't really speak. It's another one that's literally in downtown New York City. There's one end of the street is Cava, and in the middle of the block on Wall Street is Sweetgreen too. So you kind of have but that's always the case in New York City. You always have, and then you've got a million of other places to go to too. So there's a lot of variety. So it makes it kind of difficult, by the way, for me to kind of gauge things, because you just have a lot of variety in New York City. So in any event, just to get back on track here a minute, I was talking about how whippy the semiconductors have been, and this is what I was referring to. And we don't have the change for this week. This only will show have this change to weekly, so these are weekly stats. But look at the last 5 weeks. The semiconductors were down almost 2%, down almost 10%, going back to the middle of July. Then they were down another 3%. Then they were down another 9%. Then they've recouped. 2 weeks ago they were up 3%, and then last week they were up 9.7%. So this is much bigger than I think normal, and normally, and there's a couple in here too. So I mean, it sets this up for there's going to be a fairly big report next week, and this name is going to affect a lot of companies. It could be a good thing. I played this. I'm out of Nvidia in my trading account. I played this, speaking of the bullish 80% rule, and I got out on this day, and I've been watching to see if we were going to get follow through, because price was just kind of sitting here on the top of the valuary. But this is a full-on rejection. So I think at this point, I talked about how that's one of the better or easier trades, is to do the buy the rumor, sell the news. But if this thing kind of comes in a little bit, I think that would be better than it screaming to the upside, before earnings. So I'll leave it there for now. I think overall, one day is not a trend. Even with yesterday, where I was talking about the price action was very good yesterday. One day is not a trend there, and I think watch your support levels at this point. But overall, I think I was just going to leave with this. I was looking at the VIX. Well, actually, a trader in at Tribeca Trade Group mentioned this to me, right? So here's the VIX kind of moving back up, right? We started to kind of move higher. We had a green bar 2 days ago. Yesterday, the VIX was up, and today even more so. But when you look at the short term, it's kind of there's also some resistance here when we look at the 1 hour chart. Not that I like to say that there's like support and resistance with the VIX. I'm not sold on charting the VIX. I never really have been, but you do have some resistance here using the volume profile, and that's at $18, not $18, but an 18 of VIX. There's some resistance. There's also another level of resistance there at 1875. Finally, forgot to mention the chart of the dollar as I led off with that. Right, here was your reversal on the so by the way, this looks like some type of a head and shoulders, left shoulder, head, right shoulder. So here's your break, but coming into support, or where there's been previous demand, which is at this virgin point of control, right? And finding support here, reversed off of this, and gain today. Now, I don't know if that's going to be, if we're going to continue to rally here. I would watch the 200-day moving average here, right? Because we have not gotten back over that. So I think the dollar will be important. I think rates as well has had something to do with the volatility today, and I think those will be interesting to watch tomorrow. Have a great night, everybody. See you tomorrow.